Hey there, future financial guru. Ever wonder how people fund their big dreams? Whether it's launching a startup, buying a house, or just managing life's expenses, financing is the secret sauce. Stick with me a few minutes, and I'll break it all down. The types of financing, how to choose the right option, and even some real-world success stories to inspire you. Ready? Let's dive in. What is financing? So, what exactly is financing? It's the process of securing funds to make things happen, whether that's starting a business, expanding one, or making big purchases like a car or home. Think of it as the fuel that powers your financial journey. Example: let's say you want to open a cafe. Financing is how you get the money to rent the space, buy equipment, and hire staff before your first customer even walks in. The two big players: debt and equity. One. Debt financing. First up, debt financing. This is when you borrow money from a bank, credit card, or other lenders and agree to pay it back with interest. The best part? You keep full control of your business or assets. Example: imagine you borrow $20,000 to upgrade your bakery equipment. If those upgrades bring in more customers and higher profits, paying back the loan becomes a breeze. But be careful. Interest rates can pile up, and late payments hurt your credit score. Point 2. Equity financing. Now, let's talk about equity financing. Instead of borrowing, you bring in investors who provide money in exchange for ownership, aka equity in your business. Example: think of Shark Tank. A startup founder might give up 20% of their company to an investor for $50,000. There's no debt to pay back, but they'll share profits and decisions. The downside? You're giving away a piece of your business. So, choose your investors wisely. Other financing options: not into debt or equity. No problem. There are plenty of other ways to get funding. Check these out. Crowdfunding. Raise money online from supporters who believe in your vision. Perfect for creative projects or community-driven businesses. Grants. Free money, yes. FRE from governments or organizations. It's competitive, but you don't have to pay it back. Leasing. Instead of buying, lease equipment or assets. It's like renting, easy on your wallet up front. Factoring. Need cash fast? Sell your unpaid invoices to a factoring company and get the money immediately. Great for businesses with receivables. These options are great for specific needs, so keep them in your back pocket. How to choose the right financing. Here's the million-dollar question. How do you choose the right financing for you? Simple. Focus on three key factors. Cost. Debt comes with interest. Equity means giving up profits. Always calculate the total cost of each option. Risk. Debt carries repayment obligations, even during tough times. Equity means sharing decision-making and control. Strategy. Align your choice with your goals. Need quick cash to cover a short-term gap? Go with debt. Building a long-term dream? Equity might be your best bet. Example: if you're starting a tech company with a high-risk, high-reward model, equity financing could attract investors who will help grow the business. But for buying inventory to meet immediate demand, debt is a smarter choice. Mistakes to avoid. Let's talk about common financing mistakes so you can avoid them like a pro. Taking on too much debt. Don't borrow more than you can realistically repay. Start small and scale as you grow. Giving away too much equity. Hold on to as much ownership as possible. Every percentage point matters in the long run. Ignoring the fine print. Always read contracts carefully. Look out for hidden fees, variable interest rates, and other sneaky terms. Real-life success stories need some inspiration? Check out these real-life examples. Small business win. A boutique owner used a $10,000 loan to revamp her store, boosting sales by 50% in just 1 year. Crowdfunding success. A filmmaker raised $75,000 on Kickstarter to produce a documentary that's now streaming worldwide. Equity triumph. A tech startup secured $500,000 from investors and grew into a multi-million-dollar company within 5 years. Here's what you should remember. Financing is your tool to achieve goals, whether short-term or long-term. Debt gives you control but comes with repayment. Equity gives you support but shares ownership. Other options like crowdfunding and grants can fit specific needs. Now it's your turn. Which financing option are you considering? Tell me in the comments below. I'd love to hear your plans. And hey, if this video helped you, Hit that like button, subscribe, and ring the bell for more tips to level up your finances. Thanks for watching, and remember your financial future starts here.